Welcome, everybody. Thanks for coming today. We are broadcasting live from Park City, Utah, where I am. And Joe, you're where exactly are you now?
Today, I'm in Chicago.
Right? In Chicago. We're super pleased to have Joe back again. Big thank you to my friend Don Goodman, who I've known for 20 years, who is involved in Tactive. And just for the record, the name has changed. I actually have interest in branding, and so I love the new name. And I don't need to make you happy in any way, Joe, but I do love the name change. It makes a lot of sense. And the prior name was Strategy Marketplace. Marketplace, right? So super exciting to get all the updates here. We're going to be recording this and posting on the Family Office Insights YouTube channel. So if after you listen today, you care to review it or share it with others that might benefit from what you hear today, you're welcome to do that. And of course, we're going to make sure you are in direct contact with Joe. And so feel free to connect with him directly. So I think I'll get it right here, Joe. So we're doing this webinar today with the intent of raising money for the enterprise. But while you're listening to this, please also be mindful in a business development way, because you're going to see that it's accessible to others through registered investment advisors and that sort of thing. Is that fair, Joe?
Yeah. I think that's a great intro into what it is we do. Yeah.
So again, we can't hear or see you, but we welcome and encourage all your questions as they come to mind, and please post them as they do come to mind so we can get to as many as possible, as we have a lot of people coming on today. You can put them in the Q&A or the chat box, and if you put them on there, we'll do our best to get it to as many as possible. So welcome, Joe. Thanks for coming again. Take it away.
Awesome. Thanks, Art. Thanks for having me. This presentation is pretty broad in general, and what I'm going to do is try to make this, geared towards what I believe this audience is, which is, private banking, investment banking, family office, that network. So I will use some terminology that's industry, wide, and then please forgive me if I say, hey, if you don't know what this means, I'll still give you the definition. But we are Tactive, as Art said, formerly Strategy Marketplace. We were waiting on having a possible trademark, and the Tactive just makes more sense for what it is we do. And what is it that we do? Quite simply, we level the financial playing field through bespoke investment strategies. And that's kind of our ethos, but the space that we're playing in, the overall market, is the TAMP space. So the fundamental part of our business, the core of our business, is being a TAMP. And for those that don't understand what that acronym means, I apologize if you do, but it's a Turnkey Asset Management Platform, or quite simply, we support the independent RIA, registered investment advisor firms, with back office operations, support with investing, support with doing their billing, receivables. We do all this back end operations and logistics for firms, so that way they can scale their business and focus on just growth. And that's really the foundation of it. And there are quite a few big players in our category, but the good thing about our category is it's growing at close to 40+% per year. And it's a very large addressable market size at 12.7 trillion. More importantly, what's going to set us apart from all the other players in our space? Well, as we talked about the bespoke financial investment strategies that we have, that's one aspect that sets us completely apart from our counterparts. But we have a FinTech, more importantly, a WealthTech component to us that makes us more special, as I like to say, than our counterparts and competitors. And the good news about that category that's inside of FinTech is it's one of the largest and fastest growing categories within the space. So the fact that it's a WealthTech play on top of the TAMP market gives us a very unique position in this industry. just to give you a little background about what's happened in this business. Now, for those of you that know, Envestnet happens to be the largest TAMP. They have the largest amount of assets under management in the business. They IPO'd in 2010 for about 63 million. They're worth over 5.3 billion today, and have been around, for the last 12 years. Not bad in a 12-year run since they've come to market. But I mentioned that we have a WealthTech component, and this is something that Envestnet does not have, and that would be the companies such as Wealthfront and Betterment. Now, Wealthfront and Betterment, what these two companies are, they are robo advisor platforms, and they're pretty traditional in the sense that this is a client-facing platform where an individual investor can go onto the platform, they can put their money in, and then the platform basically auto-invest their account for them. And so there are a lot of different robo advisor platforms that have started to hit the market, but these two in particular are the ones that I'm interested in. Betterment happened to be the first one to market, so they were the pathfinders in there. They are not public yet, but they are estimated to be about 1 billion as far as evaluation. They have over 600,000 individual client accounts, and they have close to 2,000 advisors that are using their platform. And what's interesting about Betterment, when they first came out, they were supposed to be the replacement for the financial advisor. So they were supposed to fight the financial services industry. They thought that individual investors just want automated investing and they didn't want to have to think about it. And lo and behold, that was inaccurate. We found very quickly that individual investors may want to forget about it for a portion of their portfolio, or some of the younger investors go that route. But in reality, many people still want the help of a full service financial advisor. They still want the help of somebody that's going to give them the full guidance that they really need, because investments is really only one portion of the puzzle. And for those of you running family offices, you know that it's a very complex situation to figure out how to make everything work for a family or for an investor. And then Wealthfront, the reason why I wanted Wealthfront here, which happens to be the second largest independent robo platform, is because they just were sold earlier this year to UBS Bank for $1.4 billion. So the space is rather large, the space is growing, and there's room for some disruption in this. And that's where we really come in from our platform on the TAMP side, but also with the WealthTech component. Now, we have a really good team. I'm fortunate enough to have Rick Dwyerlin, our CRO, on here, and I can go into their backgrounds at another time, but for the sake of this presentation, I want to keep this rather short. But the three of us are really big on our core values as a company. And I know a lot of times during these types of presentations, you don't really get to know the company itself. They're, just talking about the products and, features and benefits of their product. But what's important, if you're going to invest in our company, as Art mentioned, we're looking for an investment for our enterprise to help it grow. You need to know that we have our heads on straight and that we have a clear defined focus of where we want to go and what we're about. And the biggest part of our core values that we have is what we call fiduciary power. Now, fiduciary is a term that is completely thrown around in our industry. Sometimes people kind of just sigh and say, who's a real fiduciary? But for us, we really take that message seriously. From everything that we do when we help the firms and the advisors working with our platform to help support them, all the way down to the client level, to our investment strategies. And you're going to see what we mean on about a slide or two when I talk about how we want to help people mitigate risk with our core strategies. And then I can go into the other ones a little bit later, but the fiduciary power was the one I really wanted to touch upon before we went any further. And then the big point that makes us different to everybody else. So we're a support system for financial firms, right? So we're the TAMP aspect. What it really comes down to is our secret sauce, which is the strategists that we work with. The partners that we have are what's really given us some of our quick success with our platform. We have some really interesting partners. Capital Management Services is a firm I was associated with, been around for 36 years. They've been a money manager, managed over 200 million in assets under management, and basically has been on multiple custodians, managing other RIAs, clients' accounts for them. They do the back office trading, and we get strategies from Capital Management that are exclusive to our platform that you can't get anywhere else. And then another thing that most people don't understand about the business is with Market Gauge. Now, Market Gauge, they have a service providing signals and publishing to individual investors, and they have a really large following of people that they subscribe to their services. They get investment knowledge, they get trade knowledge, and so they have a really huge fan base. And what Market Gauge has done, they have given us some strategies that you're not going to find on any other platform as well, that's exclusive to Tactive. They have a really good core group. They have Michelle and Keith Schneider there. Michelle is all over the media. You can look her up. She's got a best-selling book on Amazon about investing, planning your money tree. She's kind of the go-to person for trades right now. They get it right when it comes to the economy, when it comes to inflation. I highly recommend that if you're interested in our platform, you look up Michelle Schneider from Market Gauge. It's almost a day doesn't go by that she's not on TV talking about the markets. But they're a great partner of ours because they have strategies, again, that are driving traffic to our platform through different media channels. So it's a way for us to get the name out there and to also help people. And SunGarden Investment Publishing is another publisher that has a really large following and a good strategy that they're driving things to our platform as well. And then we have a few others that are not mentioned on here right now, but are coming soon. I actually just flew in this morning from being out of town, and we are closing a deal with a company that has over 20 billion in assets under management, really large company, and they're partnering with us and giving us a great fixed income product. So these are products that advisors are only going to have access to through the Tactive platform. So the B2B side of the business for advisors, supporting them and giving them financial strategies they can't find anywhere else. Art, I saw you were on mute.
Yeah,
so
no.
I think you had a question.
Well, you're probably not going to do this unless I ask you. And so I think this would be a good spot to inform the audience here. You know, what is it that you have in experience and your family that I happen to know that allows you to be able to, you know, go at this with such confidence and expertise and experience. So I think it might be a good idea to explain a little bit how you got here.
So you do want the more of the backstory. See, I
Yeah.
cut all that out for the sake of time for you, Art.
Yeah, no,
That's
but just,
okay.
you know, you can make it Reader's Digest version, but I think it's instructive.
Yeah. So my previous firm, this one down here, Capital Management Services, that was started by my father in 1986. So I've been around the business growing up. I actually got involved in the business around 2009, 2010. My experience was I was a trader for the firm. So as advisors around the country wanted to use strategies that capital management distributed, I was the one working on the trade desk, pulling the triggers and learning how these models worked. I became a financial professional myself, an advisor for high-end clients in Los Angeles around 2013. Started my own practice, built my own book of business out there. And what was happening during that time, two things. One, we were growing in assets under management because more and more advisors that I was meeting around the country were coming to me saying they needed a new strategy. They needed something that worked, and they wanted things that were tactical in nature or active. And that was the ethos of what we were about. We believe in tactical investments, things that get you out of the market when you know things are getting a little risky, and things that can get you back in the market when things are going well. So we've been a tactical shop for all those years. And what really made me look at something that was automated was because I just wanted to grow our practice without having, you know, to do all the paperwork. I wanted to onboard clients a lot quicker, and there wasn't really a solution out there that I could find. And then I ended up working with Folio Institutional at the time, and they were building out robo platforms. And because of that, we ended up building our first iteration, which was the old version Strategy Marketplace back in 2021. Goldman Sachs ended up buying Folio Institutional. And when that happened, we wanted to put together a new platform. We needed to look for a new custodian. And I'll get into that in just a minute of where we transitioned. I was joined by Rick and Lynn. Lynn Arciero has been part of some really large organizations and high-end companies, and is amazing at doing branding, and helped us change the name. I actually give her credit for the name Tactive. Strategy Marketplace was something that was, just irking her a little bit, but that was the name I came up with. So she came up with Tactive. So I got to give her credit for that. And Rick Dwyer was one of the advisors that had been working with me over the last few years. And he started many different ventures and taking companies from private to public many times over. And I was lucky enough that he joined and helped us with our operations. But so I've been doing this for the last 12 years, and I've come to realize what it is firms need from a back office standpoint. And we built technology to augment what they're doing, but to help drive traffic and help give them customers and clients. So that's why we're very confident in what we're doing. And we're partnering with people in this industry that as a new firm, you wouldn't normally get in the door. But as we're getting in the door and having these meetings with firms that are, 8, 10, $20 billion, it's very evident that we're on the right path. And it's very evident that they want to partner with somebody like us because we have something uniquely different that no other TAMP platform has out there. And I'm confident in saying that. So there's my shorter version, Art, for you.
That's great. Perfect. Thank you.
So here's the secret sauce, though. So one of the things that I learned was that in order to create a portfolio and in order to create a managed portfolio, a lot of times what you might do at your family offices or a financial advisor may do is they're going to go find a strategist or a money manager, and they might pick that money manager. And maybe they allocate 10% to that money manager and they allocate 10% to this money manager over there. One of the things that we wanted to achieve was taking that process out, saying, what if we could put blends together, or what if we can use some type of technology that will give you the right percent? So maybe you only wanted 5% with this manager, or maybe there's only should be 5% with this manager, and this manager should have 15%. And so our blender, our robo, basically takes those inputs from a client's perspective, and it will blend them together and generate a portfolio. And we have some portfolios that we've crafted ourselves, but just to show you something that is balanced, something down the middle, is what we have here on the screen. And I don't focus on the return so much, even though our returns are very good and we have verified returns going back to 2015, and we have hypotheticals prior to that. But I typically like to only show verified returns whenever we do a presentation. So we have verified returns going back to 2015, and obviously they look really good, especially when you go back to 2020 when we had COVID. And it's it's pretty close to the S&P this year, but that's not what I'm really looking for in order to mitigate risk. The biggest thing that we play up with our firm, and the reason why we are tactical and we believe in it so much, is we put the biggest emphasis right here on drawdown. And if you look at, our max drawdown was about just under 11% during the last 5 years, where, Spider was down 33%. We know that was right back here in 2020. That's what really makes the difference from a portfolio. We can really mitigate that risk, and you can save your clients money when the sky is falling. And we know what type of market we're in right now. We see all the turbulence going on. We see inflation going up. This is the time that most people need at least a sliver of their sleeve in the tactical component. So this is combining all of our strategists together, which is what no other TAMP platform does. And it's combining their multiple strategies to cater it specifically for a client's risk tolerance. So I just want to emphasize that one more time. We have multiple strategists blending multiple strategies to craft a portfolio. So if you really wanted to say, how are you a fiduciary? There is no bias when it comes to our strategists. It literally is the right strategy, the right portfolio that we try to do based on, clients' responses. And so there are a few ways advisors work with us on our platform. The first one is if they're with an independent or, a captured large RIA broker dealer, we can be a money manager. So we can put our Tactive strategies on their platform. We have a few that we're working on right now. We just worked on a good deal where, the firm has a few $1 billion and a few hundred advisors. That's going to give us access to that entire firm, and that will give them access to our strategies. So that's a way for us to make money in AUM. Another way for us to make money in AUM is if an advisor wants to leave their firm and they want to join us as a Tactive advisor. So, they're with a large wirehouse, been thinking about going independent, and they want to join and they want to bring their book of business over and they want to be a Tactive branded advisor. They can do that. It's great for us because we can support them, we can help them grow, and then they're part of our platform. And let's say they have aspirations that they want to be their own RIA firm down the road. They want to get over $100 million. We love to help people do that. So if we're helping them do that, they might just move over to our RIA platform, or where we're just doing back office support. We're doing the trading, we're doing the billing, the rebalancing. We can do all that. We can support the large RIAs. So that's a reason why you're going to see why we're growing so quickly and why we've had so much success. But that's one reason why an advisor would like to join with us. The best reason why I think advisors are joining us and what they really see the value is our WealthTech platform. It's the robo advisory component. Instead of coming in and going head to head with the financial advisor, or having our robo platform compete with the advisor, like Charles Schwab has the Intelligent Portfolio, which somewhat competes with their retail advisors. We wanted to be a true partner with our advisors, and we want this to be a lead source and a lead funnel to take clients from trying the strategies out and eventually leading them down a path through our marketing and our internal systems to hire a financial advisor. There are going to be some clients with small accounts. They're never going to want to be a financial advisor, and we understand that. But there are going to be people that are going to try this out and they're going to want to use this. And then they're going to say, you know what, I have more money and I like what this is doing. This is doing better than what I've been doing. I need some financial guidance. I want to go to an advisor. So our robo platform is really that lead funnel, which you cannot get anywhere else for our advisors, which is a huge recruiting tool for us. But even more, oh, go ahead, Art. I see you off mute.
Yeah, thanks for noticing. So for those that aren't necessarily in the know about the financial services business, the challenge is spending way too much time in business development and not enough time doing other things, right, that are more productive, even though business development is important to grow your business. So my questions, and maybe you can answer it later or however you expected, but is the business development part working? And are the people that are using the program getting new customers as a result?
Yeah, I'm gonna jump into that in just a minute for you.
And Don, by the way, you missed me giving you making this all your fault. So thanks.
Yeah, I see that Don just sent this question in. So that's great. So I'm going to get to Art's question in just a minute when I go over some of the success that we've had already as an operating business. So no, great question, Art. Another major component that I wanted to let everybody know of is this, what you see on your screen right here. So, the traditional financial service industry is just now getting into cryptocurrencies, and a lot of the larger wirehouses are still sticking away from it. Whether you like it or not, clients are asking for it, and they're wanting it as a part of their portfolio. So we've managed to put the question right off the bat. So when somebody comes through our platform and they're going to get one of our strategies, we ask them, would you like crypto in your portfolio? Because of one of our new partnerships that we've developed with Interactive Brokers, we have the ability to manage traditional assets and some crypto assets in their portfolio. Right now, the risk is pretty low, and when the robo spits out a component. So there are some risk measurements. They could choose an entire portfolio of cryptocurrency, but even the most aggressive person might get a 10% allocation, but it goes all the way down depending upon if they're in retirement. But there are robo platforms that do traditional assets out there, and there are robo platforms that do crypto assets out there. And we have been in development to do what we believe is one of the first ones to actually marry the two together in a robo platform with tactical strategies. The other platforms may have passive strategies, they may be buy and hold, but you're actually going to get an active tactical strategy combined with your traditional assets. This is why it's really important to understand that we're on the forefront of this with our program here. Once they get through everything, it's going to spit out, a portfolio for them. They'll get to see all the different percentages and the different companies that they're working with. And then one more thing that I do want to touch upon about our platform that's different than a Betterment or a Wealthfront. If you go to Betterment right now and you wanted to work with them, you have to work on the Betterment platform, meaning they are the custodian, they are the bank, that's who the client has the account with. If you want to work with Wealthfront, it's the same thing. With our platform, because we're a TAMP, because we do that office support for an advisor, which gives us access to grow so quickly, is that we use multiple custodians. And we use the big custodians that the independent RIA firms use. So we're on Schwab, TD, Goldman Sachs, and Interactive Brokers. We're looking at Fidelity to possibly get on them very, very shortly, and I'm sure we will. But for right now, these are the 4 main custodians. That's important because if an advisor has $50 million and they want to work with us and they want to join Tactive or they want us to be their office support, and let's say they're already using Charles Schwab, it makes a transition to work with that advisor so much faster because it's a very simple form. It's a very easy process to move clients over rather than moving them and transferring assets out from one custodian to another. So we are custodian agnostic with our platform, and we're going to constantly develop new custodians that we're going to partner with as we go on. So that's a really important part that I wanted to touch upon. And then in the very end, I told everybody that this is a lead source to lead people from, opening up an account to working with a financial professional. In the very end, they're actually asked that question, do you want us to work with your professional? Do you not want to include them at this time? Do you want to help finding one? So advisors that are in our network, we can send them to, or do you just want to manage your own money? And that's perfectly fine. And then the clients will go to a client dashboard, which will be really interesting because they can manage and see their portfolio. Now, one question we got yesterday from one of the meetings we were at was, can a client come into their account and start trading around themselves? The answer is no. We do not want the client to trade on their own. We want them to be in our system. We want them to use our portfolios. If they wanted to trade, they could go direct to their custodian. They can trade. That's a different account. What we found, if you look at Betterment's new CEO, she just last quarter of last year was talking about the growth of Betterment. She attributes the last $8 billion of growth directly related to Robinhood. And the reason why Robinhood was important, because Robinhood opened up more accounts than almost everybody else out there very, very quickly with a bunch of people that wanted to trade on their own. And what happened to those people that were trading on their own, they learned very, very quickly that trading is hard. So what happened after that, they decided to move their accounts over to Betterment and Wealthfront and other robo platforms because they just didn't want to do it anymore themselves. So we don't want to create a platform where someone's going to individually trade. We want a platform that they're going to get into a model and let our algorithms and tactical quantitative strategies do it for them. That's the purpose of our models. So this goes a little bit into Art's question, but also a little bit about our background. So in 2021, that's when we started. Our program launched with Folio in February of 2021. I pulled over about $1 million in assets from my own clients to give it a try. And we were just basically in testing mode at that point, most of 2021. What's really interesting about that is we ended up being nominated by FinTech Global, a FinTech global-wide community, and named us as one of the WealthTech top 100 firms to watch in 2021. And we were just basically launched with a very small program. And later in that year, as we were developing the TAMP side of the business, America's Best TAMPS named us as one of America's Best TAMPS. They wrote a great article about us. They also nominated us as one of the America's Best TAMPS again this year. And then later that year, we were nominated in 3 different categories for the Wealth Management Industry Awards. And we ended up winning best in digital robos for being a TAMP on a digital platform. And so that was really interesting. This all happened last year prior to us raising any capital. and just basically having a basic program with Folio, which then got bought by Goldman Sachs. And as I mentioned earlier, we started redeveloping our second phase of this. So Art, to your question about has this led into advisors getting clients? Not yet, because that phase is about to launch in the next 1 to 2 weeks. We've actually finally got all the connections with Interactive Brokers with the crypto strategies. And we've actually started having people register on the website this week. So it's very interesting for a platform that we've done zero marketing on, haven't done anything to let the world know that we're a platform other than we've won these awards, and it's been word of mouth thus far. But that connection is just now happening. So we're calling our beta testing is finishing up in the next 1 to 2 weeks here. And then that's going to start doing the round robin of our RIAs and advisors that are on our platform. When people want to upgrade, it's going to start upgrading clients to that. So it's just about to launch and just about to start happening for the advisors working with us right now. You have a question?
Yeah, I'm just I just wanted to let you know I was paying attention.
Thanks, Art.
Is there a nuance here that I recognize that might be important, in that there's a lot of firms out there that are doing roll-ups and they acquire advisors, whether it's a broker dealer or RIA or something like that, and they have to buy them or convince them to come over. And I think, right? Am I wrong? In your case, you don't have to do any of that. If you just did the numbers here, you got 10 advisors, you got 160 million under management. It can't be that hard to get 10 more advisors, right?
So that's actually a really good point. So we've looked at, first and foremost, to understand my background, understand that my own father, 67 years old at Capital Management Services, gets emails and calls all the time from private equity companies looking to roll his firm up, my old predecessor firm up to another company. That's happening. And, they're throwing ridiculous numbers at advisors to pay them to come over for 10 years, move their book of business. What does that really do for the advisor's clients, though? Are the advisor's clients benefiting from an advisor moving from one firm to another? Are they getting any new services, any new technology, anything changing for that client?
Probably not.
Nothing. Who benefits from it?
Yeah.
It's usually the advisor. They're lining their pockets and helping their retirement out.
Yeah, and you can't blame them, but that's okay. Yeah.
I don't at all. I don't at all. But that's not our target market. We're not going after that advisor whatsoever. We're going after the younger 35 to 55-year-old advisor who has between 10 and 50 million of assets under management that needs help scaling their business and has the, ability to make change and use technology to their benefit to help scale. So the advisors, the reason why, so in 2021, we had zero funding. This was all self-funded, and we were just building this and working on this with our own pockets. We in Q4 of last year, we raised about $1.2 million, and we became I call it a real company in January of this year. So we actually hired some employees, got some more back office staff. When we did that, we had a few advisors that were just waiting for us to have the support so they can come on board with us. And so this last quarter, we onboarded, the 7 other advisors and moved the assets under management. We call it assets under management AUM, AUA over, because when you're a third-party money manager, that's considered AUA. But overall, we're managing 160 million of assets already in 1 quarter. And the reason why those advisors, we have one particular advisor, you may be watching. I'm not going to give you a shout out if you are watching, because I know you're waiting for it. But we have one particular advisor who was with a large wirehouse. Don knows who he is. And he had a pretty good offer. But what we're building here, the story behind this and what it actually does for him and his clients, the strategies that you get to save your clients from a market disaster, that's a draw that pulled this $35 million advisor out of that 160. A $35 million advisor brought his book of business over because it saved his clients, from the market this whole year, this quarter. And he's attesting to that because the models do work, and they're tactical. And this is, again, when the world is behaving the way it is, buy and hold and the old way of doing things is just not going to work. So yeah, we're not going after that roll-up advisor. Let the other people buy those out. We don't have to. We can get advisors through our marketing. We can get advisors through our tech and through our services. And that's what we are hanging our hats on.
Yeah, it sounds to me like you're looking for the advisor that wants to scale and grow, not exit and monetize the practice.
I mean, again, what's our first core value? It's fiduciary powered. We want to make sure that we're doing what's best for our client, and just rolling somebody up and you're not doing those clients a service whatsoever.
Yeah.
We want to help as many people as we can, which is why the robo from a consumer side of things is great. The foundation of our book, the foundation of our business is the Turnkey Asset Management Platform to help the advisor. And then the consumer product is it's just a bonus for everything else. That's why we grew this 160 million without our new robo being online. I had 8 million last year with the old robo, and then we shut it down in order to get this robo launched. So that tells you right there that the power behind our strategist partnerships and the models we have is really the main story for advisors. The robo component is kind of it's the sexiness behind it. And that's the thing that's going to make it a household name. That's what's going to make us have a 15x multiplier when we have a liquidate, or when we sell or we have an IPO compared to a white labeled brand.
What's the multiple on just an advisor?
It depends what the PE firms are looking at. I believe, and I've seen something in the 2 to 3x. Maybe 4, depending upon how strong that advisor is, but it's not as much as you think, because you may not keep 100% of those clients anyways. You may only roll 80% of those clients over. So the book is pretty sticky, but there's not a lot more revenue you're generating off of it. So I'm more comfortable saying 2.5 times actually. But when you look at a WealthTech company and a platform company, now you're looking 10, 15 plus X.
Totally different multiple. Yeah.
Yeah. Completely different.
Yeah. Don knows this, and I don't mean to belabor it, but I was involved with NFP and Jessica Bibliewicz and all that stuff back in the day, and they were paying 5X, and so that all worked out well for everybody. But this is a tech play, right? The AUM is just one component of it. So yeah, I totally get it.
Yeah, no, that it is. And that, just want people to understand that, this early success is not slowing down. We have a few advisors already in the pipe for this month. We're looking anywhere from 30 to 40 million of AUM adding just this month alone. And here we are in May. And, we're seeking capital so we can build out our infrastructure. We need more people on staff for the ops to help pull advisors over quicker. But I think I get to that actually in a slide or two. Let me go over some of where we see this going, Art, as far as some of our projections real quick. I'll touch upon this quickly. Yep, you muted. Yeah. So I'm
gonna let you go. Meaning,
oh, no worries.
Stop interfering.
No, interfere away. I love the questions. It actually makes this more engaging as well. So remember, advisors, this is our bread and butter. So we see the growth of our advisors over time to get to somewhere in the year 10, about 1,700. I mentioned Betterment has close to 2,000 advisors. They did that in 10 years, but they weren't working with advisors the way we're working with advisors. Advisors use Betterment as a platform for their small clients. With our platform, because of our strategist and because of how risk managed they are, we're even getting the high net worth accredited investors, larger advisory practices working with us. So we can be much more profitable for a lot fewer advisors that work with us in our platform. And Betterment has over 650,000 individual clients. Average account size is around $40,000. We're finding that with a tactical strategy, that account size can actually go up to a little higher. Wealthfront managed to get higher account sizes than Betterment as well. So we know with fewer clients and fewer advisors, we're going to be much more profitable. But if I'm an advisor and I'm looking at this in year one and saying, hey, there's 25 of us and there's over 5,000 clients registered on the platform, that's almost, that's looking like a lot of leads for each individual advisor on an annual basis that's coming in from our platform. But if we hit these numbers by year 10, we'd have over 50 billion in assets under management, and that would make us about 325 million in annual revenue. So just to show you where we're looking to be in 10 years, we'd like to hit that around year 7, but I'm putting 10 year on there to be a little bit more conservative. And again, talking about why we need the capital, we still have a little bit of development as far as our tech goes, but it's going down to sales and marketing, a good portion of that, 55%. Building out the sales teams, the sales channels, going between people who will call on the larger independent RIAs, the broker dealer space, the different market segments. So we need to build out that sales team. And of course, it comes down to marketing. You have consumer marketing to help build the Tactive brand as a consumer brand and a household name. And of course, you have the marketing on the advisory side. So that's where we need some of the capital. And then, like I said, back office operations. So what are we giving away? What's the ask? The ask is we're raising $10 million. So we're raising 10 million. We're willing to part with 20% of the company. This is preferred shares. And for those on this call, we're looking for at least a minimum investment of $100,000, which is 2 membership units because we are an LLC. And then I wanted to kind of end with this, Art. And if you had any other questions, you can of course, jump in here. But what are the 10 reasons why we feel, you should act now with our company and get in while you can? It's first and foremost, you already know that TAMPS are growing at an accelerated pace with over 40% CAGR year over year. This is one of the fastest growing segments in especially the independent RIA space, which is the space we're playing in. But the fact that we have this robo component with these tactical and their dynamic and their quant-based strategies gives us this cutting edge over the other TAMPs. There are no other TAMP that I've seen out there that has a platform like this. And again, our strategies are world-class, but that business model to attract both the retail, the institutional RIAs on both sides of the model and let them work together, being that true fiduciary is unique. We just touched upon this, Art, a little bit ago. FinTech valuations beyond attractive. I mean, we saw Robinhood, Coinbase IPO last year. That was amazing to see, the valuations they achieved off that. We're not a new business. We may have really started, as I call it, in January of this year, or January of last year, really, when we were testing. But we're not a new business whatsoever. We've been working on this stuff for well over 30 years with my previous firm, and now the partnerships that we have. Everybody has a wealth of experience, and we're already generating revenue, about 85,000 a month in revenue. I know we didn't mention that earlier in the presentation, but we have the AUM coming in. We're only growing, and our revenue numbers are only going up. So it's not a new business. It's already earning revenue. It's not pre-revenue. So I really wanted to make sure people understood that. We're winning multiple awards by the industry. We haven't put one press release out, even though we've won these awards. And we've been waiting for this next launch of the newest Robo. And you're going to start seeing tons and tons of press releases in the next few months, because there are a lot of things happening with us that I couldn't even get to in this presentation that are going to be really great to achieve growth with us. And, you're more than welcome to talk to me about some of that stuff offline at another time or after this, if you want to connect with me. And, if we do need to do multiple raises or another raise, we really, you're going to be diluted less by being one of the early investors. And you're important to us. We host quarterly investor meetings and we do Zoom calls, and we want to update our investors with what's going on. And we value feedback. We value your guidance as well, if you have industry experience or industry connections. So you're important to us when we work with you. And this is for your accredited investors, which I know on this call, most of you are with family offices and you have, obviously accredited investors. But think about it this way from two sides. If I'm the family office and I'm watching this presentation, I would say this. I would say, well, one, this might be a really good opportunity, for us to invest in, so we can build this company and be a part of it when it has its multiplier. Or two, if you're looking at it even from the model perspective, and you want to see our fact sheets and see how we actually help mitigate risk, might be something you want to put a sliver of your sleeve and put some of your clients' assets into. If you're looking for a tactical component, there's no reason you couldn't work with us on that side. So you have 2 ways to work with us. Tactical component is a sliver of the sleeve for your clients' investments, which is a true tactical component. or you can invest directly in the company and achieve some growth with us. And if you want to do both, then that means you really believe in us, and that's great too. So with that, Art, that's the end. I'll turn it back over to you.
Yeah, super helpful. Just a heads up, more than one person messaged saying that they're interested in the PPM, so that's good. The few questions. One, what is it that you need to do operationally to make sure that the tactical strategies continue to produce good results? Like, how hard is that to get done?
With you mean the actual strategist
Yeah,
results?
yeah,
So that's actually a really good question. One of the reasons Tactive exists was because with capital management, I was only working with one strategist. What was really important to me was understanding the role of diversification amongst strategists. What happens if that strategist is having a bad year or bad multiple years? You lose clients, you lose advisors' confidence. So that's when I started looking for other people. And that's when Don and I got connected, and we were looking at different strategists together. Market Gauge, Sun came into play, and some others that I can mention later when everything's finalized. What's important to me is that, one, they have a big team behind them, that they're constantly innovating, and they're not just stagnant, relying on the same traditional methods that they did 10, 15 years ago. If they're relying on that, the markets are completely different today than they were back then. So they have to have a team that's constantly innovating and tracking their progress and seeing if anything breaks, because every algorithm works until it doesn't.
yeah.
So if they have a team behind them that can do this, then that's why we want them on the platform. Secondly, we want them to have we want them to verify their returns. It's great. Hindsight is amazing. We can make any back tested hypothetical report look awesome, but until it's actually, have some type of attestation to it. This is the same thing for us to get onto some of the bigger platforms. We have to have this documentation together, but our strategists have that as well. So those are important aspects for us. I hope that answered your question.
Yeah, it does. There's a question about ticket size. So if somebody just wanted to invest directly on the platform, they can, or they can use their advisor. And I'm going to answer part of it, and you tell me if I'm wrong. The ticket size through the advisor is up to the advisor. The ticket size directly for you is what?
It doesn't matter. I mean, if
You
you're
can put
talking
10 grand in.
Yeah, I mean, so on the consumer, so let me answer this another way.
Yeah.
Now, if you're coming from the family office standpoint and you're going to allocate a sliver of a sleeve, let's say it's 10 million or 20 million or whatever, we would do that directly. You're not going to go through necessarily the robo platform and have your client go through that process. You'd work with us directly, and we'd give you some of our more, I didn't mention this, you're going to get a more customized experience on the direct relationship with us as an institution than you will from the robo.
Totally makes sense. Yeah.
The robo has some base level strategies. The advisors have access to enhanced strategies. We did that on purpose because we wanted individual investors to get introduced to the strategies through the robo, and they're the smaller size client accounts. That starts at $500 and can go up to whatever, it doesn't matter, but those accounts are going to be smaller. But if we're going to work together on an institutional standpoint or family office standpoint, you're going to see some of the enhanced strategies, things that we can get into leverage. We can get into some, fixed income, real estate products that we're working on. There's other things you're going to get from us, and that ticket size can be whatever. Now, I would say if you really want to benefit from it, you're right. Like $10,000 plus from your client's account makes a heck of a lot more sense. You're throwing in $500 and it's a small ETF strategy. You're going to get some growth. You're just trying it out, but you're not going to really benefit for $500, but it's a way to get people in the door. So they at least get invested and get started.
And, put simply, a $10 million check is going to get the appropriate attention because it has different objectives.
We have a different department for that. So we have a different client relationship that, as a family office, you'd have a different point of contact to work directly with you to help achieve your objectives.
Yeah. So some of the family offices who are on the call here, I know, and it's often the case where they have a legacy relationship with one of the big wirehouses, largely because they can get relationships, they can get about access to the balance sheet, that sort of thing. And so there's nothing to say that they can't continue to work with those and then slice off a piece and do a pilot program with you and say, okay, let's see how this is going to go. And then, see, I call it a pilot program because everybody wants to test the waters before they write $100 million check, right?
Absolutely.
And so I imagine that's a very comfortable thing for you to agree to, right?
Yeah, absolutely. And that's why I mentioned, if you're looking at this even as a sliver of the sleeve for your family office, you can try us out for something smaller, like a $10, $25 million check and try our strategies that way. And you're going to get a little more attention. Like I said, it'll be a little more catered towards your investor needs or your clients' needs. And you're going to get some of those enhanced strategies, which, I showed you a balanced model before. I didn't show you the super good stuff.
Yeah. So to the extent that you can share, because I think it's important for the ones that are on the call that are interested in investing in the company, that you've produced revenue and it's meaningful, right? I think you said $85,000 a month.
Yeah, we're pushing 85 right now on a monthly basis. We have some quarterly fees that come in. I'm thinking, well, that's just where we're at right now. And again, we started really generating revenue in January once we got the back office and we started bringing on the advisors. It's only going to get, at least from what I see right now, I think we'll hit over 100 in the next 60 days. I think we're going to be, by the end of the quarter, we should be closer to 300 million. That's the goal. So we make 65 basis points. So, do the math on that. So the more AUM, we're charging 65 basis points on everything. And, there can be, by the way, for your family office, we can negotiate that because again, that's an institutional relationship, but on the front end, the advisor end and the robo side, 65 basis points all day. Most robos are around 25, like the betterments and the wealth fronts, because they're very passive. There are some I did find another robo out there who's closer to 1%, but you're talking about this automation and the tactical strategies you're going to get for 65 basis points. That's a steal. Absolute steal.
I totally agree. The revenue is gleaned from the basis points. Is there other sources of revenue?
Yeah. So the other way we earn revenue is if an IAR joins our firm. So we are much more profitable when somebody wants to be a Tactive advisor because we earn revenue on top of their revenue. We typically earn anywhere from 15 to 20% of whatever they're generating. That's because, we are that back office support. The other thing I didn't really touch upon, and we can get into this in a little bit, or as we develop. There's a way for us to earn revenue even through other indirect partnerships by utilizing our platform. I don't want to get too far into that right now because we're still doing some development. I want to keep some things under the hat right now. But
whatever.
What I can say is it's gonna be a really good revenue driver. It's building on our service as a sales model and really making this a true tech company.
Yeah, super cool. Well, you made a lot of progress. Impressive.
Thanks.
We can thank Don. It's all his fault.
Well, hey, he's that actually there's a good touch point upon that. I know you're saying that tongue in cheek, but the one thing that you'll have access to by working with us is our strategist will spend time with you, answer questions, let you see, they'll take you in the kitchen. They'll show you what they're making. And not a lot of strategists or firms give you access, that up close and personal. So if you're interested, we can set things up where you can actually, talk to them. It's not just, I know we're kind of the distribution center, but they love getting on the phone and talking to people, especially if you're going to try us out and you want to feel really comfortable and you want to know the team behind it. We're more than happy to set that up. And Don's part of the Market Gauge team.
Yeah. Super cool. Yeah. That's unusual. Good for you.
Yeah.
Well, I'm glad to see all the progress. So why don't you wrap it up with a final comment, and then we'll make sure everybody gets in touch with you.
Yeah, sounds good. I'm really looking forward to, you connecting with me. I can send emails out to everybody. I'll follow up. But honestly, every meeting I'm having, I've been in this business for 12 years. And when everybody's telling you they're on the right track and they're smiling and they're working with you and they're excited to become a partner of this, we know we're on to something. And the fact that have the TAMP platform figured out and this robo advisory component, your investment in us is going to go a long way. And we're creating something special.
Joe, I think it might be my bandwidth. I think I just lost you.
Here.
That's better.
Can you hear?
Yeah, I don't know what it might be. My computer. I don't know.
Yeah.
Oh, there we go.
Well, hopefully you heard the end.
Yeah, most definitely. But we got it recorded anyway. You're looking good there as a standstill anyway. Yeah, you froze up. All right. Well, that probably signals the universe telling us we should wrap it up. Thank you again. I'm going to either come see you or we'll see each other in New York. It was saying it's your computer. So thank you everybody for being here. And as I always say, thank you for sharing with us the only thing you can't make more of, and that's your time. Thanks, Joe.